Been a massive week for the market as we close out October. S&P now pacing for its sixth positive month in a row. That's the longest streak since August of 2021. Joining us now, one of the early bulls. 7,000 is the price target on the S&P, and he just launched his new firm today as well. He is Brian Belski. He is the founder, the CEO, and the CIO of Humulus Investment Strategies. Is that just so you don't have to come on and say you're honored and humbled every time because you just have it in the title now?
Less is more, Scott. We're just going to try to keep it simple.
Congratulations
yes,
on the new gig. Congratulations.
Thank you so much. Thank you so much. You know, we are blessed and fortunate to be in this business for a long time. I'm not going to tell you. We've had
everybody knows anyway. 30 years. Go ahead.
We've had amazing partners from BMO to Merrill to Piper to Dane Bosworth, and I'm hearing from a lot of those people today, and I'm just so honored to hear from them. And we're excited about what's coming next, and we're going to hopefully continue to provide the same type of portfolios, the same type of research to all of our clients, existing and new clients. So we're really, really excited.
You're still going to run multiple portfolios?
We are. The portfolios in construct are going to be very similar. There's going to be some changes, but we're also very open to looking at other things in terms of how we're going to run money and what those themes are going to be. We're excited. I've been thinking a lot about how we're going to talk about starting a new company at the market top. Are we a market signal here? But we don't think it's a market top, and we think that there's more to go in this cyclical part of our secular bear market. And we think there's more to go, and we think next year is going to be very good. Not as good as this year, but very good is good.
Why don't you think next year is going to be as good as this year?
Well, we've had this monumental change in terms of how we're looking at markets, especially kind of moving away from being more interest rate sensitive, more inflation denominated, and of course moving away, we think, from the tariffs and a lot of the noise coming out of Washington. And that's why we said on air last time we were on your show, we talked about how we think that actually 2025 is building the base in more of an argument for Goldilocks in 2026 and 2027. So we've had these exhaustive moves to the upside and downside. We think we're going to head into more normalization. And normalization, Scott, means kind of high single-digit performance, high single-digit earnings growth, a 10-year treasury between 3.5 and 4.5. And that's a really great environment for stocks. So kind of going back into stock picking, even this week has been a great example of the clear delineation that's happening between stocks and tech land and financials and consumer discretionary. And that's really been our longer-term theme in terms of being a stock picker.
If you think that we're going to get only high single-digit returns, let's say, next year, are you also suggesting then that you don't think that the mega caps are going to continue to lead like they have? Because theoretically, if you get such outperformance from those names again, because where they are in the market cap space, you would think that the S&P would return a better year than you're predicting.
Yeah, it's a great comeback. And here's what we'd say. If our base case is high single digit, low double digit, and we continue to see the earnings growth, I want to come into this and underpromise and overdeliver. That's what we've done our whole career in terms of forecasting the markets. We want the earnings situation to continue to improve. We actually think we're going to see stronger earnings growth really driven by financials. But you're right, I think the larger cap stocks, just like in 95, 96, really led the market. We're obviously seeing more of a broadening out, so we're not going to have this, what we think is more concentrated performance in the big caps, the larger cap stocks. We're seeing this semblance of broadening out, and that's going to be very positive for the longevity of this secular bull market. But our base case is low double-digit performance, going back into the traditional performance of the stock market over the last 80 years.
All right. I joke around with you because it's fun to do, but I know this is a big day for you personally and in your career. So congratulations once again. We're happy for you, and we look forward to having you back on the set.
Thanks so much, Scott.
All right, Brian. Be well. That's Brian Belski.